Good evening, ladies and gentlemen, and happy Turkey Week. Gobble, gobble. We got Black Friday deals popping up on every corner, but now it's time to talk about the markets as we head into this shortened trading week. Now, despite the holiday vibe going on, there are some decent macro data on deck and a potential market shift that's brewing that you won't want to miss. It has something to do with the dollar. In today's market brief, we're going to be diving into the market conditions. We'll talk about expected moves, some intraday setups, the mega cap weekly expected moves. We got to dive into those big boys and talk about the futures market here too as well. All that and more on today's market brief. So buckle in. Let's get into it. All right, ladies and gentlemen, welcome back to the show. Here we go. Tomorrow we get our FOMC minutes out. Be aware when that hits the tape, it can add a little volatility. On Wednesday, we get core PCE, durable goods, GDP growth rate, personal income, personal spending. So we get a lot of data coming out this week. And let me just start off by saying, hey, what I saw take place in the market is really not all that bearish. I think we may be due for some sort of consolidation in the near future, which we'll discuss when we look at market conditions. But what I noticed today was quite interesting. What I noticed was the Dow Jones up about 1%, the S&P 500 up flat, NASDAQ rather flat, small caps up a whopping 1.8%. Tech flat. Now, why do I find this to be interesting? Because Nvidia was down 4.18% on the trading session, and Tesla was down 4% on the trading session, and yet the market still remained flat. This, to me, is a pretty bullish sign, because if these names want to turn back around, these names alone have proven to hold the market together on up days. Now, could it turn into something bigger? Yeah, sure. Of course. We'll talk about that and where they stand within those weekly expected moves later into this episode. I want to dive into the market shift that nobody is ready for. Well, maybe you might be. But I want to talk about the dollar. The dollar has been seeing this explosive move since October, and we saw this really big, boom, blow-off type of candle into 108. Okay. And then today we saw it back off a little bit. So my question here is the dollar going to finally calm down and start to digest? And if it were to pull back, where would it potentially pull back to? I drew out a couple levels. I matched this trend line. You can see it's tagged it 3 times pretty much to perfection. So if we come down into this area, we kind of have confluence. We're around this 104.5 to 104 level where you can see we've had prior support, turn resistance, then we broke out. So a back test of this level could be a potential level to watch out for. Now, this is what I find very interesting here. If I look at the dollar dating back to 2022, you'll notice that November to the new year, November to where we are right now, you'll notice that the dollar actually shows seasonal weakness. And we've been seeing a monster rally and no weakness yet. So are we going to potentially see some weakness in the near future? Well, the only thing that's really different here is that we just are in a presidential election cycle, which was different than these prior years that I'm looking at. So if I go back to the last time we had him in office or won the office in 2016, and we look at October, November, December, you saw the market actually rally into the year end. And when the new year began, if we're going to follow that same track, we went down from 2017 into 2018, basically in a straight line for the dollar. So the dollar showed a lot of weakness. However, if I zoom into where we currently are here, you see this pullback into about the 5th of December. So we're kind of in this range right now. So even though that back in 2016, we saw continued strength into the end of the year, we did happen to find some type of seasonal weakness right at about where we currently stand right now for the dollar. And the reason I want to bring this up to your attention is because we recently had a large move from China as far as stimulus goes, and the market exploded to the upside, and many people were left in the dust and then tried to catch these moves. It consolidated, it tightened up. We saw continuation back to the downside. Now, over here, you have the dollar. Down here is China. I'm using KWEB, but you can look at FXI. I mean, you can look at individual names like, gosh, how many individual names there are. PDD, BABA are some of the bigger ones. You got JD. The list goes on. TIGR, which is a smaller cap stock. The list goes on. Okay. But what I'm noticing here is that the dollar's been rising on this rapid move since October. And that pretty much marked the October top there in China after its massive run, creating these kind of like big jaw, right? This big monster. All these teeth right over here. His tongue's out like this. And then his other teeth are right down here, about to eat you. But my thought here is very simple. If China, if KWEB, FXI, whatever, it's kind of creating this wedge pattern right here at the lower trend line. If the dollar is going to start backing off and potentially coming back into and around this range, or maybe just take a little bit of a break and then rally up and then follow suit that we saw here in 2016, this could actually open the door for some really good trade back into the China markets. So that is kind of the thought here of a market shift that nobody may be ready for, that they might have already kind of given up. But I would say pay very close attention to how the dollar is going to trade in the very near future. Based off of seasonality, it's likely to see weakness, but that's not always a guarantee. So I want to get this in front of you now before these type of shifts have the potential to take place. All right, oil. Saw a little bit of a down move today. Oil is highly correlated to energy stocks. We talked about that in the prior episode, and you can see energy was down there at the bottom. And this is actually pretty bullish for the markets when energy underperforms, right? We've talked about how energy relative to the S&P 500, when it goes up, more than the price of the S&P 500, we typically see weakness. Well, we saw the opposite of that today. So oil right now, we've been seeing a series of lower highs, right? And we're kind of cruising around in this compression pattern right here. It looks pretty darn weak, but just don't be overly too confident. If it starts going against you, if you're like if you're shorting oil or shorting energy stocks, whatever the case may be, just manage risk as you see fit. The 10-year yield, we've been noticing this RSI divergence just like prior. We noticed the price momentum oscillator just like prior. It looked like it was getting ready to potentially drop. Today, it was down 3.29%. On the prior episode, we talked about this diamond pattern that was forming and how we started getting to the kind of contraction portion of it. Well, guess what? We broke out today, obviously on the back of the yields falling, and a measured move of this, if you wanted to measure a move, it'd be from the low here to the mid-range here, probably to the breakout area. It's roughly at about 95-ish area would be the target, the measured move of this type of a breakout. And we're back now within the quarterly expected move for TLT. All right, when you move out of the quarterly expected move that far and that fast, it's likely to see things like this take place. We've seen it countless times here. So let's continue on. Bitcoin came off. We're almost right there, almost at that 100K by a few $100s. And we started backing off here, down about 4.78%. But overall, I mean, this is quite normal to see. You see a big move. Maybe it consolidates. Maybe we just start turning back up immediately. I don't know. But right now, the Sailor to Shift tool is still on a buy signal, but the rate of change did get pretty extended. So to see this come off a little bit, we'll see if it sets back up for another trade. If I look at the NIMOT, the Nisey-McClellan oscillator, to get in some various indicators here, there is a negative divergence forming on this, and this may be of a concern, but what you'll see here is we have higher highs in price, but yet the internals are still weakening. We do see this strengthening here, so perhaps this opens the door to shoot higher and kind of clear out this divergence, but we would need this reading to go over 150 to change that, and then perhaps we can see a new negative divergence form. But you can see, looking back through history, it is marked many times that we've seen divergences that has played to the downside and then positive divergences that played to the upside. We also talked about recently the put to call ratio, and I don't have the updated chart for today's price action, but what we're seeing is still a relatively low reading. And when we're at these low readings prior and it started to pick back up, we did see weakness in the overall market. So I think we got to just be mindful of that. It doesn't mean it can't turn around and go lower, but I would just be patient. And if that is the case, is when it starts turning back up through 0.8, if it does get down here or starts turning up from here, it could present itself some more digestion, more consolidation in the markets, or potentially a pullback, right? Very common to see 10% pullbacks, once a year, twice a year in the S&P 500. And we're coming into a new year in the very near future. Let's look at some of the bullish percent charts. I like to look at the RSI when they're overbought and oversold. This is the discretionary sector, and we haven't seen a high reading like this since 2023 in July. When we did get up into these ranges, you can see that we started to kind of consolidate and pull back before making new highs. RSI's in the overbought territory. We're getting a pretty strong reading here. So just be aware that the consumer discretionary sector is getting a little heated in this current moment. Now, that's not the same for technology sector. The tech sector here, you can see the RSI is right in the middle of the range. We're at about 62%-ish percent of stocks on buy signals based on those pointing figure charts. So this one's not really giving us an overbought or oversold reading. So my thought here is simply that, hey, if the market wants to rotate out of some of these names, or even some of the small caps that can be potentially extended after this last 4 or 5 day rally, perhaps maybe they might focus in on some of these tech stocks. BPOEX. Now, this is the S&P 100. Why am I looking at this one before the S&P 500? The reason is because the S&P 100 or the 100 largest market cap names. Now, not all of them can move the market, but we're looking at the largest market cap names in the S&P 500 by looking at this chart, the 100. And we did have a bullish divergence here, right? You have the low, the lower low, the high, the higher low. And we've seen the market from this point rally ever so slightly. If I look at the BP-SPX chart, you can see it was a very similar situation. We have the low, the higher low. And since we kind of called this out and we were looking for, we were calling it out over here to look for this. And guess what? The market found itself a little bit of footing as we hit a new all-time high today, but we did not manage to close up at those new all-time high territories. I want to go over to market conditions now. So not only did we see Nvidia, right, come down 4% today and Tesla come down, and the market remained positive, I want to point you towards some of the gamma charts and then where we stand amongst the 5-day moving average. I look at two things when it comes to market conditions that will make me say, hey, it's time to take my foot off the gas. And right now, it's just not saying that. So I don't care if the market comes in a little bit. There's very specific levels that I'm going to be looking at that I will be like, okay, now I can take my foot off the gas. But right here, we have a lot of traders reaching up to 6,000 still, and that's kind of where we are. And there's really not much below it. There's about something 50 points lower. So we're kind of within this range of 5,950. Okay, 5,950 is going to be a key level, and then 6,000. And I want to mention that the JPM collar, right? The JPM collar, which was placed at the beginning of it was the end of the last quarter, and it sets up a strategy for this quarter, and they'll put a new one on at the end of December. And basically, in short, the upper level was 60-20. And I'm seeing some people show that it's 60-50, but the one that I saw was 60-20. So give it a few points for the range or whatever. But we did come up into that level today. And the reason why I find that to be important is because that can have the potential to limit or to cap the upside as more dynamic hedging takes place into these markets. So we have this level at 6,000, and we do have traders reaching out further, 50 points further, and then up to 6,100. And this is going to be hard to break 6,000 if we don't see this start to take off here. And, in short, it's just basically telling me this. Above 5,950, it's a time to be bullish, and that's about it. When we get below that, we'll see what structurally changes here. But if I look at the gamma flip line, this tells us when we're in negative gamma or positive gamma. Price action is above it. So what does that mean? It means that when we're in positive gamma territory, volatility typically decreases. Dealers look to buy the dip, they sell the rip. And when we're in negative gamma territory, this is when volatility typically increases. You'd have to keep continuing to watch this show because I do show my VIX chart every time we flip into negative gamma territory, and it blows people's minds because when we go into negative gamma territory, you typically see the VIX fire off. And what happens in negative gamma territory is you have dealers selling into selling and buying into buying, which is driving that volatility, and you get much more aggressive type price swings in and around negative gamma territory. So right now, we're above the 5-day moving average in the SPY, the Qs, the IWM, semiconductors, biotech, the DIA, and they're all rising 5-day moving averages. So check for the bulls. We got 5-day moving averages. They're increasing. We're in positive gamma territory, albeit we're extended and we're at the upper kind of level. On the last brief, right, we talked about the risk to reward, how, yeah, it looks like we can go more to the upside, but now the reward to the upside is far smaller than the risk that's to the downside. So we just need to be cautious, bullishly optimistic, but cautious in and around these key levels. But let's look at some of these expected moves here taking place. So the SPY, we did gap up today. We did have some news, and we almost came into the upper weekly expected move. It's a pretty big expected move, right? We're the market's not open on Thursday, and then on Friday, I believe we're open, but it's a shortened trading day. I'd have to double check, but I'm almost positive. You can see we almost came up to that level, so we still have some room to go there. And we came right back in and closed right at the month-to-date expected move. This was right, this level right here, this upper level. We pulled this level at the end of the prior month. Okay, so this is something that I send out to the Discord group. I send out month to date and I send out quarter to date. Quarter date's still up here at 6:15, and we still got December to go. Okay, so this is what the week is pricing in right here. It's about $6.71 from last week's close, and we're almost up in that range. So we're still wide open range. Look at yet last week, right? The week prior, we pulled this number. So on this day, I pulled this week, and we closed right there. Okay, so these are very incredibly important levels, because it's basically handicapping forward risk on the markets. Doesn't mean it has to be 100% accurate all the time, but if you look at the probabilities and you look through history, 75% of the time to 80% of the time, it tags one of these levels and it closes within these weekly ranges. So it's quite important. All right, so here's the Qs. The Qs has a bigger expected move. We have $8.01 plus or minus from last week's close, and we came somewhat close to it. We basically saw a nice big rally to start the day. Everything was bullish, and then we closed slightly up on the day, but we did reverse. So we have, we're pretty much unchanged on the week, wide open range. The month-to-date expected move is just above 512. So if we come into and around this range, just be cautious that that's in confluence with one another, the upper weekly, the upper monthly expected move. You can see we got through it earlier this month, and we talked about it when we did, and we basically just traded in and around these levels before breaking back down, and now we're coming back up. Now IWM, this is the crazy one. So in recent trade, we talked about this outside bullish day here after a nice breakout within a consolidation. Then we had this kind of reversal day. So this was a great setup for a continuation move. Now we just hit a new high here on the IWM, and you could see we tagged the weekly expected move. We got outside of the quarter to date. Yes, quarter to date. We still have till December, right? So this move, we went 1, 2, 3, 4, 5 days. Boom, 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 boom. Pretty strong move through the quarter to date, through the weekly expected move, creating a shooting star candle. Now, I know a lot of people are going to talk about rotating into small caps, but I just want to be very mindful that we saw a big move. We're already at the quarter date. We're well above the month-to-date expected move, and we're creating the shooting star. So right here, is it the best entry? In my opinion, no. I don't care if it goes up here like this, even further, right? At this point, I would care about watching for the next consolidation. Just like we saw this consolidation, I didn't know how deep or low it was going to go, but as soon as we started seeing some bullishness like this day, where we opened lower, closed at the high of trading session, engulfed the prior day candle, then had this inside day over here, close to an inside day. That right there was a clean setup. Okay, so right now, is it the best time? In my opinion, no. And do I think it can go higher from here? I do, but I do think that I would be more patient than anything when it comes to starting a new position. And I want to reiterate that, because when was it? It was, I'm going to just show you right now live, actually. Why not? I posted this in the Discord group on 11/20. So we'll go ahead and I'm going to go ahead and copy this off. I'm going to throw it up on my screen right here. So 11/20, you can see kind of match these levels out here. Okay, so you can see this was that inside day I was pulling in, looking for a bounce. Did I think it was going to bounce that high? No, but it did. It doesn't matter. Like, that's why I don't really like targets. But the fact that I'm saying just be careful and cautious to start a new position, but if you're in a position and you caught this, just consider a couple of things. Updating your risk parameters. Maybe it's updating to, or taking partial profits, right? There's a couple of ways you can do this. Take partial profits and or update stop losses, okay? Because even if it comes down here and fills this gap, comes back, does the whole thing, it can still have the potential to go higher. So however you plan on mitigating risk or managing risk, stick to your strategy. Some people might just say, no, I just entered a long-term right here on this breakout to add more to a bigger position. Perfect, cool. Let's look at some intraday price action charts. Now, as the SPY started today, it started at the daily expected move zone. So the upper daily level, this is based off of the 0 dates options. And this is the level that's implied from the VIX, the daily implied move from the VIX, okay? And it creates a zone for me as far as a level to be more aware of if price action gets there. So we started the day there, then we came back down. Now we're still above a rising 5-day moving average. And we're right below that week to date. So if we start getting back above this, I would be watching for that upper weekly expected move. If we start coming back down, I would be watching for that lower 5-day moving average that's currently inclining right now into and around these zones. I would still be open to I would be open to going long in around these areas as long as we start seeing higher lows. I don't know how price is going to get down there, but when it does, or if it does, you got to be ready for a potential turnaround. So I think that's the way we got to play it. But now, if you want to update your daily zones for tomorrow, I'm going to go ahead and provide them for you. This is the new daily zone. We have 594.81 down to 592.03. So you can screenshot this, put the zones on your screen. You can see that they are above the 5-day moving average right here. So if we do come into this tomorrow zone, there you go. And if we start breaking out to the upside here, just be aware that's in confluence with the upper weekly expected move there too as well. The Qs started the same thing, right? This blue line, that's actually the election VWAP. And you can see it got up there, it rejected, it got up there, it rejected, got up there, rejected. And this just tells me that how important this election line is. And guess what? We're above it right now. We just gapped above it, came into the upper zone. We started undercutting it and tightening back up into and around this area. So as long as we can hold this and a rising 5-day moving average, perhaps we can get back above that week-to-date anchored volume weighted average price and start going, bam, up for the upper monthly expected move and the upper weekly expected move too. If we start breaking down from these levels, just wait and cautiously be optimistic for price to start putting in higher lows and go from there. Because remember, we can still come, boom, right back down to the weekly expected move. But if you're aware of these levels, you'll know that even if we undercut it, there's a high probability that we come back and close within these expected moves. Because 68% of the time, right, if you think of it in terms of standard distribution curve, right, 68% of the time, it finishes with the 1 standard deviation. This would be that 1 standard deviation move for the week. This would be that 1 standard deviation move for the day. All right, so let me give you the updated Qs implied move. This is the updated implied move for the day tomorrow. We got 510 to 512. We got 503 to about 501 down there. So you can screenshot this, put these levels on your screen so you're aware of them. So if price comes down in around this area, there's that 5-day moving average. It's still currently inclining. I'll tell you what, we need semiconductors to start lending a hand here in the very near future. And that's why I want to talk about mega caps right now, mainly Nvidia. Nvidia today started the day, boom, tagging its lower weekly implied move, okay? So it's already down there. We had earnings over here. The move didn't happen. It just basically stayed stagnant. And today we saw some more volatility with some volume behind it. So I would be saying if we do see more weakness in Nvidia, pay attention to 132. The reason why is because we saw it act as resistance here, support here, resistance there. You can see that once we kind of broke above it, it held as resistance again here. Then we saw a break. So this kind of level here at 132, 120, 128 to 132, this kind of zone in here, it's going to be important for the market to kind of hold itself together. So if we do come down into here, I'm going to be interested to see what net flow looks like at that time, because it might open up an opportunity to come back into the weekly expected move. But, that's best case scenario if that happens, but we never know that we might just gap right back up tomorrow and start pressing back up into the middle of the weekly range there too. But just so you know, we did tag that lower weekly expected move, which by the way is very small this week, given the context of the earnings have passed and it's a shortened trading week too. So it's smaller than its normal size. If we take a look at Tesla had a big reversal today. We hit a new high and then we reversed and closed at the lows. If you look at the RSI indicator, which I don't have on my screen, this is actually a higher high. And then RSI is actually diverging with a lower low with a bad candle. So open the door to potentially its lower weekly expected move, maybe more. It's still in bullish context, so just be aware you got some big wide ranges of candles, right? Price action got very tight. We saw it explode. We see volatility still here. Just be aware that this lower level is just at about 330, slightly lower. And then up here is the upper weekly expected move at about 380. I have the exact levels in the Discord group if you want to join. There's a pinned comment. You sign up through Patreon. I'll show that screenshot later. Apple saw some strength today. Where is it at? It's not quite there, but it's near its upper weekly expected move. This is a good sign for Apple. We've been seeing higher lows being built and matching highs over here. So as long as we can come in, maybe tighten up and potentially break out for a nice move in Apple, but just be aware if we start breaking down in the near future, from these levels here, from this tight consolidation or from, this larger structure that's been forming. If we take a look at Microsoft, also saw a nice little update, came off a little bit from the highs. $7.66 expected move. So this is, a positive sign too. If you want these big players to participate to hold the market together, these moves in these market cap names really saved us from Nvidia and Tesla's wicked price action today. So Apple, there's a Microsoft here, 7.66 expected move, no tag. Then we have Google, right? Google sold off hard on some news, came into an inclining 200-day moving average. I put this on, in my little swing trading community in the swing trading chat. On a 15-minute time frame, there's a nice little positive divergence forming. And today we got a little bit of a price action to the upside. It's a $4.64 expected move. I took some of my position off close to and around the highs today, but we did float around these levels for quite some time, so I'd have plenty of time to reduce my position from that little bounce. Now, do I think it can go higher? Yeah, absolutely. But given the context of a strong move down, I'm just cautious on the first bounce. I'd prefer to see a higher low. Amazon almost came into its upper weekly expected move, $5.91 expected move, which pushes it around 204. And I do want to call out that Amazon, right, we broke out of this move, and now we've been kind of wedging in this formation. So to continue to watch this to see if we do have more gas in the tank. Perhaps we do extend through, consolidate more, and then potentially try to move through that level in the coming week. Just remember, obviously, this week is a shortened week. Then we got Meta. Meta did almost tag it by a few bucks over here, maybe not even a few cents. $14.84 expected move. We came into and around that level. We started rejecting from that. Just be aware that Meta, in recent trade has a high, a lower high. It has a low, a lower low, and a lower low right here. So just be aware that you got to be a little cautious here with Meta. I will say that you can see that we've been kind of holding this multiple times on this lower trend. And then if I draw a line from these highs, you can see that it's kind of a volatility expansion pattern where you have a small pullback, then a deeper pullback, then another deeper pullback. So what I would like to see is price action to start tightening back up in the very near future to break back to the 600 and potentially even further of this larger kind of base that's a little bit wobbly and slobbly here. Now, if we start to see more sell side, the lower weekly expected move is in line with the prior resistance. And once resistance is broken, it has the potential to become support in and around 540. So if we see a price move down into these ranges, you might be considering, hey, now on the smaller time frames, right? If they start seeing higher lows being formed, positive divergences on the RSI, whatever you use to look at, perhaps it might set up for a nice little bounce move in the very near future, which brings me to futures. We're going to talk about 4 charts here, the big index products, and just kind of an update of what we've been seeing in the markets. Here's ES. ES, we went 1, 2, 3, 4, 5, 6 days in a row to the upside. And right now we're trading. Now I want to call out, what does this price action look like? We have pretty, large range. So we have a large range candle, another large range candle, another large range candle, smaller range candle, and a smaller range. And then while we're moving up into and around these areas, notice how the body right here was, it's not really that authoritative, but it was bigger than this body. And then this body was a little bit smaller. So the momentum of this move, right, of these 3 bodies have slowed down. And then the ranges of these candles, you can see are getting a little bit smaller. This little doji candle today can mark turning points or periods of indecision. So as price is here and we're at that, that key gamma level, we're at the JPM collar, to see price consolidate up here or even pull back a bit, totally healthy in my opinion. What I'd be more cautious of is if we start breaking this low down here on ES, which is clearly a little further away than, where we are right now. That's, roughly at about 58.60. Maybe the side lower where we, pulled back into this golden zone and saw a nice bounce. So right now, what am I seeing? A low, a higher low. And what I'd like to see here is obviously a higher high in futures market in the very near future, and then maybe even come off, consolidate, and reset ourselves back up for a move. NQ, you do that higher low. We have not got a higher high, and this one's been lagging, but we talked about this outside bar and how we can potentially come into this area of resistance. Well, guess what? Today, NQ came into this area, right? Where we saw a big thrust candle from this high. Boom, we saw a big move from it. And then also we broke down from this level right here with this big thrust candle. So, and then we ended up basically opening right in this range and kind of closing right underneath it. So this is why I put that level there. And then the above level was, you can see that we really kind of had some levels of support here. And then once we broke down from that level, things kind of fell apart. And you can see as we came back into this level here, this zone, that's where the market kind of came in a bit. You can see we have some large ranges, which create good trading environments for intraday traders. So just be aware, you get some two-sided trade. That's really good for traders, right? Because you can be quick, you can adjust, you can move, but just know that if you're swing trading, it isn't the greatest looking at this because you get faked out quite a bit. So just be aware that that's kind of the current environment. Now, if we look at Ruddy also, right? Boom, saw a nice big move. We're seeing a little bit of follow through in the overnight session. Our futures market that just opened up. Just be aware that, yeah, this is probably going to have to cool off in the very near future. We already discussed that. Not going to spend much time there. And then YM also pulled back into that golden zone. Nice hammer candle. Boom, we see some authoritative candles. And this one is one of the more stronger ones because you have an authoritative candle, another authoritative candle. And yeah, this got a little bit smaller. So to see a little bit more of a push here, maybe even reverse, create some sort of a hammer candle, something like that, or some sort of doji candle on the next trading session or this week sometime. A very strong possibility. But would I start new positions in this area? Nah, I wouldn't start new positions. I would be looking for the consolidations. I'd be looking for the pullbacks. I don't want to drill that into your heads anymore. That's all I got for you on today's episode, everybody. We talked about a lot. Hope it helps out. See you later.